Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, March the 15th. The year's 2019. Let's talk trading. Weekly wrap up. I know this week was no different than the other weeks. You employed money and risk management on each and every trade. In fact, because you employ money and risk management on each and every trade, it gives you the confidence to pull the trigger. Because you know when you pull the trigger, you most likely will not lose more than what you're willing to lose on any single trade. So no single trade can take you out of the game. It's that simple. Employing your stop loss with your money and risk management gives you the confidence to pull that trigger. So rather than try to overthink it or overanalyze, if you get the signal, hey, I should enter this trade, or hey, according to my trading method or plan or indicator that I use, I've got a trade opportunity. So you basically just jump in because you already know ahead of time the most you're going to lose, and you know ahead of time what the statistics are. And you know if you do this same trade enough times that over the long haul, you should be coming out ahead. Speaking of coming out ahead, those traders who trade the weekly open gap got paid off this week. And we take a look at the euro, actually this is dollar yen. We're supposed to have euro yen up here. How'd that happen? So we take a look here at the euro yen once again. It entered the weekly lower wick zone, came out, went through the midpoint. So you had first opportunity of a trade was right here, coming across and then hitting that midpoint and continuing. And once again, you see we have 3 days closing above that yearly open. Notice here we open below the midpoint. That usually signals a short bias, but we crossed that midpoint, which signals a long bias. We trade that midpoint crossing. And you can see here, using the opening day of the year, month, and week, using that opening day high-low as ranges, you can see what happened in terms of we crossed above the yearly open range here, and we closed above it, but we couldn't quite get back into the monthly, the first day of the month's range right here. So you see that this acted as some type of resistance. You can see here 1, 2 tries, and then lower lows are being put in. And once again, that's looking at the hourly chart here. And you can see I finally updated this chart and the next chart. And you can see we're within the, actually we're above the range of January and February this year, but we're below the opening day of March, which we saw on that previous screen. And this is just another showing here. Once again, we're above the range, but we're below the range of day 1 of March. You can see here it tried to get through but failed. And the significance is we're watching the price action and how it relates to the opening day of the year, month, and week. And we're seeing that those ranges are significant. They seem to have significance. So you might think that maybe the big boys are placing their trades on these opening days and then they're just playing with price in between. Now, you can see we've had another inside bar breakout, daily inside bar on the euro yen. Yesterday, it closed right here. Gave you an opportunity to go long a second time and make some pips. So you see it's 27 pips off of the high, 8 pips above. So there was a chance to pull off about 35 pips on that trade. And you can see here we had a bunch of inside bars yesterday. So if you like this setup, you can use it. Oh, and just for the record, it's just using my TRO inside bar plot indicator. If you guys want to do this yourselves, each one has a different indicator tag. You can see this is for the day. This is for the week. And then this one here is for the month. And that's all it is. And if you want, you can turn the shading on. Okay, looking at simple price action using the previous day's high, open, and low, you can see here it's a tiny breakout to the upside, but it didn't pay off. So you either hit your stop or scratch that trade. And once again, the ranges are anemic. We've only got 4 over 100. And the euro yen at a measly 45 pips. And you can see here on the highest open, H1 highest open for the week and for the day, it failed to close above it 1, 2, 3 times, gave traders opportunity, short-sighted traders. Here we had a long opportunity on the daily H1 lowest open. And you can see here, the pivot point was right near the open, so not much of a bias at all. So you just take the standard buy zone entries here. They were both open to trade. You see here we had a pro entry here, a nice entry here long, another long, pro entry long, and you see here a short trigger took the money back. Either you scratched the trade or you stopped out. So once again, traders, statistically, you know the buy zone's on your side, but there will be times where you will lose if you trade it all day long. Rat zone. There's opportunities here. You can see here a nice green rat reversal. Red candle closes, green candle closes, trigger at the high of the green candle, and it took it all the way into the red rat zone. And then you can see here red rat reversal, green candle closes, red candle closes. And since this was the last time they get on that red rat ship, you would have gone short at 36 and you could have picked up 4 or 5 pips. And we saw that the pivot was taken out. And you can see here, almost took out that 57.3. It just missed it by literally 1 pip. So be looking to take this out and looking to take this one out. We still have 3 missed pivots this month. With the 124.92, 136 pips away. I don't know if we're going to take that one out, but we still have a couple of weeks left in the month, 10 trading days, so anything can happen. Price action trading, also can look at it as a breakout. Okay, one ball at the top, red at the line. Two ball at the bottom, green at the line. Or you can look at this as your breakout trades. You entered here, you break out to the bottom. You can see here we've had a few closes here. We came through, we broke out to the bottom again. Here, this was a breakout to the top, then breakout to the bottom. So if you're trading this way, you just have to look at the price action. You might catch something for, 10, 20, 30 pips, or you just might get 4 or 5 pips. That's why it's called price action. Price action simple. That's just what I call this template. And just so you know what's going on here, I just put that in the template name. This is just a modified my notes indicator, and so I know when I save the template, I know what I saved it as. Wick zone, you can see here, in it, out it, in it, out it, and back in. Huge wick zone, 34 pip wick zone. And you can see here, only one trade triggered, and it was a scratch. Nothing happened. You see here, it's almost making a double top, so it's exiting this wick zone. That just tells me scratch the trade. I mean, you can try again later. You don't even have to hit your full stop. Sometimes you just have to trade what you see and take the price action. You can see here we had about a 4 pip dip to the bottom, and now we're coming right back up. Oh, and before I forget, I'm supposed to tell you guys, come down here, hit the subscribe button, hit that alert bell. See, I forget that, and then every now and then I'll see somebody else's video and they do that. And it's too funny. I see one of my trading associates, his ads are coming up on my videos when they start. I find that amusing. He's going to try and get you to buy a robot or get you to a lifetime subscription, something. I find those amusing, lifetime subscriptions. Pay me $500 and you get everything I do for the rest of my life. I just find it amusing. You can see here the Einstein line. There was a short, not much happened. Price action, once again, is telling you pretty much what to do here. It's like, nope, we're not putting in a lower low, so you might as well take your 1 or 2 pips and be happy. Sometimes that's just what you have to do. You're just getting 1 or 2 pips, and then finally, maybe you get a 10, 12 pip run like that. But there's no sense in trying to fight what price is telling you. I mean, here, if you right here, I mean, it goes up, it's coming back down. It's like through that wick zone, through that tiny wick zone. Why you don't scratch that trade? Here you go again. You get another opportunity, and you can see here it's doing the same thing. So just remember, sometimes you get a little, sometimes you get a lot, sometimes you take a loss. But that's why we have stop losses, right? Blank chart. What do you see? I mean, which way to trade? What's price telling you to do? Sometimes you should just stare at a blank chart, see if you can figure it out without all the indicators. I mean, would you take a trade here? Or would you wait? I mean, can you see what price is doing? You see where you most likely should buy or short this? Can you see it? And the range, 209 for the week, 45 for the day. Frequency distributions. and more frequency distributions. Okay, fellow traders, have a great weekend. It's not what you trade, it's how you trade it. So come back next week and drain the banks.